Jamie, Steve, what's going on?
Well, thank you very much there, Scott. Steve, how's it going over there, buddy?
Oh, it's going good. Happy Monday.
As always, happy Monday to everybody. Thanks for popping in and checking out what we have to say. Got some good stuff to share with you guys today. But before we get going here, just a quick disclaimer here. We're all big boys and girls here. Please don't take what we share with you in an educational format as a solicitation to buy or sell securities or anything else for somebody like a registered Series 7 stockbroker. Once again, everything that we share with you guys here in these webinars is for educational purposes only. All right, I think that'll make the attorneys rest easy. And always like to take a little bit of time, keeps on growing, but we've created quite the community around the software, which is very important. Barry's Trading Room. All right, right up here in the upper left-hand corner, hosted by Mr. Barry Anderson himself. The best thing about the trading room is Barry. I'd say the second best thing about the trading room is it's free. All right, there is no charge to participate. By all means, do so. From the top of our homepage, you'll showcasing his trading techniques and how Q&A rolls around on Wednesday. Good old hump day comes around, and we give you the CEO and founder of Trade Ideas, Dan Merkin, along with our Chief Technical Officer, Brad Williams, two of mine and Steve's, I guess for lack of a better description there, compatriots in the trading war going all the way back to the early 90s. So tune in for Dan and Brad. It's always entertaining on Wednesdays. Andy Linloff is going to round out the 5 p.m. Eastern webinars with Andy's Trading Studio, and I ride shotgun with him. Friday rolls around. We like the ever-popular, ever-growing Friday. Rowdy the crowd is. We might stick around for the full 3 hours.
Can I make a note just real quick on the webinars? We are going to do today and tomorrow, and that's going to be it. So we're going on webinar hiatus, webinar sabbatical, webinar, whatever those bears do when they sleep, 2 months.
Hibernation,
something. So that's all going to pick up back again in the new year.
Well, I was a little, Scott had told us we had a bunch of people signed up for the webinar before.
That was for this one.
Christmas. All right, and I looked and I was like, "That's for clarifying that, Steve." I was
just in case somebody
I was thinking we were rocking and rolling. Okay, once again,
quick.
Thank you very much. It would have been a lot of people going, where's everybody at? Okay, perfect. Just continuing on here with the Friday 2 p.m. Anything is fair game there. Of course, that one will not be on this Friday, so we'll pick back up with that one after the holidays. In addition to the 5 p.m. Eastern webinars, we also have the TI University series. These guys run Monday through Thursday, starting at 12 p.m. Eastern for all 4 of them, Monday through Thursday. Everything from beginners up to advanced, which is on Thursdays typically. So we do recommend that you take these guys in order because you'll need to, use what you learn in 101 to become proficient in 201, so forth and so on. Not absolutely necessary to do that, but we do recommend that you take them in order. These are hosted live each and every Monday through Thursday by myself, Steve, Andy, and Sean. So the good thing about attending the live version is that you get to ask questions in real time. If you got something pesky that gets in the way, like a job or something, fear not. You can watch all of these pre-recorded versions of TI University on our YouTube channel. And once again, if you watch them, repeat them, have questions, then the best place to send those questions is the good old info@trade-ideas.com. And we always try to get back to you as soon as possible. So once again, all of these are available on our YouTube channel. Once again, subscriber growth, since we have launched the first AI module back in the very beginning of 2016 during that period. But as you can see in the chart here, user base is continuing to expand with the addition of the AI modules, and we expect that to continue. In addition to the AI being launched, we also made brokerage for live trading in the interactive brokers environment. But boy, as you all know, things have sure changed in the landscape of broker dealers. We originally decided to go with interactive brokers for the sheer fact that they had the best or the most competitive commission rate, I should say. And we've seen the zero commission model being adopted by all the big boys now after Robinhood got that party started. So things are going to be changing in the future. We're going to be adding, hopefully, a major broker-dealer that has zero commission in the not too distant future. So stay tuned for that. But the chart speaks 1,000 words here. Now, keep in mind, this is all just with IB, because it's the only place that Brokerage Plus is ported to right now where you can trade live. Demo orders are increasing still. Live orders are increasing still. Boy, once we get Brokerage Plus ported to a $0 broker-dealer, I think it's going to make these numbers here and this rate of increase look kind of paltry. Of course, I could be wrong, but I don't think that I am. So we'll see what happens in 2020. Hopefully shooting for a connection to a $0 broker-dealer by the end of the first quarter of the new year. So let's all keep our fingers and toes adequately crossed. All right, so here we are at the agenda for the day. Of course, hey, all-time highs. We've seen it before. We're seeing it again. This time it feels a little bit different than the other time. So Steve, if you're ready to take the helm, be a good time for you to talk about those squiggly lines and all the good stuff.
Well, they tell the story.
Mm-hmm.
Chart whisperer, foot tracker. That's what we're doing. I like to use that analogy a lot. You know, we're just tracking the footprints in the sand, which is the herd mentality. What's the herd thinking? And right now the herd is freaking happy. I mean, I'll draw my little happy box again here. All the technical indicators are perfectly in line. 10 above the 20, above the 50, above the 200. We have an upsloping trend. We have higher lows along the way. The only caveat, or the only thing today, is we got maybe a little too happy. Once again, now we've extended that area, that space. We've got a big space void here between the momentum line, the 10-period fast line, and today's close. On the flip side of that was a pretty decent little candle with that long bottoming tail. We just peek behind it. Actually, that tail does not really tell the story. That's a bad tick. We'll get to the cues in a second. But 3 good solid days coming out of, I remember last week talking about here, and I was like, hey, it'd be great if we just had a couple of days of sideways momentum. I know all the people that were regulars here remember me saying that. And if we could do that, maybe we could get this. And we got it, and we did that. So now where are we? Well, the jump rope is now in the upside, where we were looking at the jump rope coming on the downside. A lot of setups, you know, great backdrop setup in itself. The indexes, the SPYs, the Qs, everything was moving sideways, just waiting for that another catalyst or that another little spark of the next buyer jumping out, and everybody buy, chases the herd. What we don't want to do is chase the herd up here after 3 days and start initiating brand new positions that look like this anyway. Individual trades that might look more like, you know, something like this today. I took a position in Roku today. We can quickly peek at that. Jamie saw that. Nice little bottoming tail. I talk about this all the time. A little flush out bounce there in Roku. Was that in the early part of the day? Well, look at that. It was part of the early part of the day. Digressing from the market analysis there, but people that follow a lot know that I love those early morning washouts at levels of significance. So the point was, yeah, you could be buying today. You could be buying stuff like this right here. Does that chart look like, you know, this chart? No, I'm just saying don't buy charts that look like this where the train's left the station for 3 days already. Now you feel like it's safe to buy, because the only thing it's safe to say is that you're just going to suffer some sort of a congestion or a consolidation, I mean to say. So here we are. I mean, all backdrops point to higher. There's no bear case insight to be made whatsoever. You can fumble around with the reasons of what, who, why, economic indicators, sentiment, buyer, tariffs, jobs, GDP, whatever, Brexit, whatever you want to say, there's a reason behind it. It doesn't matter. This is all that matters. This is what tells the story here. And the story is, again, you know, the buyers really have never been happier when you look inside the way this box is just forming. And of course, you know, the bigger picture back here, coming out of that, there's just no bear case to be made. So trade accordingly. Again, I showed you that example of Roku because that's a different type of jump rope, but this is the backdrop, and this is what we're focusing on here on this segment. Let's look at the one that's really leading the way is the NASDAQ laden Qs. This was a bad tick here. It really shouldn't have been that. I'm embarrassed that we have that in there. It was probably more something like that. But again, that day in itself set a higher low, and there's our little consolidation we talked about last week, just like textbook, sitting there right on the 10-period moving average. 2 days tops, maybe 3 days is perfect, but not a lot of pullback in price. Sideways is the most bullish of all. And what do you know? We just got actually a beautiful 4 days. When you consider the way today closed, there's a lot more green in the NASDAQ coming out of that consolidation. So this is not the place to come in and start establishing a fresh new position. This is the place to maybe been selling a little bit on the close when you have charts that look like this, maybe a third or a half or a quarter, just start to lock in profits. But again, the bigger picture, all systems are go. There's absolutely nothing wrong with charts that look like that are abiding by all of their technical levels. Let's see. JC Peretz wrote something today about a new bull market in stocks starting now, although I haven't read that part yet. Well, let's just quickly, JC is a friend of ours, and I've known him for many years, and I agree with everything he says when he speaks. So years, let's go to the monthly chart. Well, I think I see what JC's seeing. You know, we kind of had a little stubbornness back here, and everybody thought, oh, is this where we run out of steam? I'm imagining JC's looking at that and saying no. And this looks very extremely bullish with 3 months of confirmation there. What was the spiders looking like on the monthly? Okay, same kind of a thing over there. We were running into this, slamming our head, talking incessantly. Andy was saying the air kept getting thin above these levels. Well, I think, you know, the shamans have gotten the climbers used to this high level altitude, and they're moving up and out of it. So yeah, JC is correct. Bigger picture, you don't want to fight this. And not only that, bigger picture, look at the space that's developing. Again, a beautiful looking chart, whether we're on the monthly or the weekly or the daily, all the planets are lining up right now. So if you're short, you're basically waiting for the black swan to show up. And that's not a good way to be. There'll be a time and a place when we're sitting here doing this market recap, and I'm talking about a market bounce that might not be trusted, and maybe get ready to take quick profits and throw some shorts back on. But we're not even near that type of market environment. This is, you know, the game plan that we've got to come with right now. Play it alongside, buy the dips, just like Sean says. Lastly, the only thing I'll talk about back to the daily, I'd be honest, if I said I wasn't, you know, mad, a little frustrated at this down IWM here, because I've been preaching for a while. Sure, it's breaking out. Let's go to weekly just to see the bigger picture here. Sure, it's breaking out of this level that we talked about forever, and sure, I adjusted my 401k, and I'm heavily weighted into the IWM, so participated well on this, but I'm impatient. I want to see this thing get back up to prior highs, where the other stuff's up here at new highs. But today it was just kind of rather frustrating, and it's just showing again just the continued character, the continued personality of this damn thing. I mean, look, Q's, green, 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 and IWM, stubborn, 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 wicks, wicks, red, red. So it just keeps stepping on its own feet, getting in its own way, tripping, but in the bigger picture, it's grinding higher, so I can't complain too much. So yeah, Sherpas. That's it. Yeah, thanks, David. That was a good point. I'm glad you brought that out. You said JC wrote something today about a new bull market in stocks. So I think we just looked at that on that monthly chart, a new bull market from that consolidation. The new direction will either continue or it will change. And the binary answer was, it looks like it's going to continue. We're working on the third month now of those candles. So JC is correct. So that's really all I got. I'll talk about the trade of the week tomorrow and other stuff, and we'll see what happens tomorrow, Jamie.
Good stuff, Steve. Good stuff. Let me grab it back from here. And we should be good.
Mm-hmm.
All right. Well, thank you for that, Steve. And, you know, when you say it like that, you know, over the past 3 months, we've had these 3 green candles. I mean, since we live and die every day, you know, in front of these screens, you know, it really is amazing when you pause and look back and go, well, yeah, the past 3 months have been green. And here we are busting out to all-time highs at what appears to be a new bull market. Very exciting for everybody. And boy, it's not like we've been waiting for this for a very long time. And here we are, just shy of the new year. So one thing's for certain, 2020 is going to be interesting on many different fronts. So without further ado, let's get on into the content for today. So if any of you saw the email that went out for registration, the topic is sticking to your trading protocols, consistency yields results, and we'll kind of bounce back and forth between this side of the screen, this side of the screen, because it all kind of ties together here. So just kind of going back to basics, right? whether you're new to the business or whether you've been here for a while or anywhere in between, we all lose track of our rule set from time to time. So it's always good to refresh and reflect on what you should be doing versus, you know, what you did for the day. Did you stick to your guns? Did you stick to your rules? Are you staying the course, right? And it only takes a little bit of getting off the course to really impact you negatively, not only from an account standpoint, but also from a mental standpoint. Can't really say that one is worse than the other. It's stuff that you want to avoid. So you want to stick to your guns and your trading protocols, and hopefully things are going to work out in the end here. So let's just kind of take a little tour here at my protocol and what I saw this morning. Of course, CC windows, something that I place a lot of value in, and still, especially with today's results, confirm that. Okay, so check these CC readings out, these compare count readings. Once again, this window is only looking at the stocks that are capitalized at $4 billion or higher, hitting that accelerated 1 minute volume in the open. Once again, the theory behind this window is that institutions, whether they have big sell or buy orders, you know, these guys sometimes have millions of shares of a fairly liquid company they have to get out of, or that they have to get accumulated on the day. Maybe it's 100,000, maybe it's 1 million, depending on what the average daily volume of the stock is. It's a big order, right? In other words, they can't just slam the market with all this stock at once. They'd have too much market impact. Okay, and just to kind of refresh everybody's memory here, you know, you hear myself and Steve, and you know, it filters down from Brian's channel a lot about VWAP. Of course, Brian has anchored VWAP; it's his little baby. But volume weighted average price is what VWAP is. It's where the average or the majority of the shares trade on any given day. So when it comes to institutional traders, you know, a fun guy calls up a trader and goes, "Get me out or get me in." If his execution price is worse than VWAP, well, he might lose his job because he's getting a worse price than where most of the volume was traded. If he gets it right at VWAP, kind of average. If he gets a better price than VWAP, well, hey, he just might get a bonus. Okay, so the value that I'm placing in this window here is that it's giving me a peek into the institutional activity on the day, because these guys can get a lot of stock traded in the opening volley, maybe a market on open order, a big cross or something like that. But they get a lot of stock bought or sold to that big order in the first 5, 10, 15 minutes. And then for the rest of the day, they have to use what they refer to as the slice and dice algorithms to, you know, slowly piece their position out and try not to impact the market too much. So my theory is that what we're getting with this reading is a little peek into what the big boys might be up to today. So not very frequently do we get big readings like what we saw today, 63% to the green side or the bullish side. Typically right at 60 or slightly below 60 is what we'll see. I typically don't really put a high amount of weight on these readings unless we get above 55%. But boy, today it just kind of blew the doors out at 63%. So what could we deduce from that? After seeing these readings after the first 15 minutes, and if we just take a look at the SPY here, got the 15-minute candles already on the intraday here, a little post-market activity just because I wanted to see. But as we can see right here, this is the first 15-minute candle. When that guy closed, let's see, where do we close on that one? 319.29. So we closed towards the bottom end down here. Okay. After putting in a big wick, what a nice little piece of information to have as this candle closes. Hey, probably going to be some follow through today. Probably going to be some continued buying. And then what did we have? 1, 2, 3, 4. Over the next hour, we just cruised up nicely to set in this initial high up here before just kind of grinding and popping a new high over here, only to get back down right in that 10 period for the rest of the day and getting a little bit bleedy at the end of the day. But boy, look at the change, you know, that we had between the gap and the upswing that we did have in that first hour, which, by the way, once again, this guy just pretty much called it perfectly today. Big buying, big 63% bias, and a good hour of follow through after the close of that first 15-minute candle. So helping me set my expectations today and part of my protocol. Thank you, compare account window. Did a great job. All right. And on the same token, you know, I had a user asking me today about, well, do these compare count windows make any sense when you're talking about the AI and, you know, what risk mode we might be able to focus on today? And the answer was, well, nothing is certain, but what I've started doing just the past couple of days, as of the last couple of days last week, is I'm starting a spreadsheet, and we're going to start recording these compare count window numbers and then setting up another column to show what the AI's relatively, each AI finished in as far as risk mode goes. Now, is it going to yield anything meaningful? Unknown at this point, but you never know until you start accumulating the data. So should be interesting moving forward. So let's go ahead and talk about Holly, and then we're going to come back to this a little bit towards the end here, as far as sticking to your guns, sticking to your protocol, things of that nature. But as far as my protocol goes today, the first part, which is the compare count readings, fantastic. I think I'll continue to. I think I will continue with that protocol because it's served me well. So let's get on to Holly today. And boy, this morning was a little it was interesting on many different aspects. But the start that NEO had today was really interesting because we saw it start off pretty heavy on the short side. And I'm just going to isolate my blotter here. We'll take a look at NEO first. Let me just sort by time over here. And we can see NEO had a short bias today, which everybody was kind of scratching their head and going, well, very uncharacteristic of NEO because typically we see it going with the trend typically. And by the way, we've got the three modules here. At one point in the day, Holly 1.0 was up closer to 3 and change because the cumulative net point total was right at 5 points at its peak for the day. All right, looks like Holly gave back a little bit as the SPY got a little bit weak, but that's okay. On the day total between 24 trades here, we had a point total of not quite 4 points, assuming 100 shares were traded per trade, which is what these numbers are reflecting. Now you might be looking at my panel down here and going, well, what's up with 877 there on a dollar count? And just for reference here, I've got all my AI position sizing based on risking $100 per trade, and then the AI will just make the adjustment, get me in the proper share amount. So if you're wondering at any time why my numbers are different than what you're seeing up here, that is the case. Now, having said that, I believe we've got it in the hopper to change the way that these tallies are reported and going off of a risk-based stop as well. We just haven't gotten there yet. Now, while we're talking about Holly, one thing to point out, Holly NEO has been on quite the tear as of late. And as Steve likes to say, it hasn't been getting people into trouble. It hasn't been taking any big drawdowns. Now, seeing the start that it had today, we were kind of thinking, well, maybe it's time for NEO to have its little red day. But as you can see, that's not the way that things finished here, all right? So before we take a look at some of the trades here and the opportunities that were presented today of capturing a little bit of conservative profit and the spread between moderate profit, which used to be risk off and risk on, a quick word about what's going to happen in the not too distant future. Now, Holly 1.0 had a great day today, and it's just the same old Holly 1.0 that came out in 2016. But that's going to change relatively soon. One of our in-house algorithmic gurus by the name of Michael Noss, he's the one that was responsible for the new NEO, okay? And he's putting the finishing touches and the finishing testing on the AI that will soon replace Holly AI or Holly 1.0. Okay, so that's going to be changing in the not too distant future. And then lastly, Holly 2.0, I've been told, is going to become the swing trading module of Holly. So we got some big changes coming up in 1.0 and 2.0. Don't have the exact date yet, but believe me, when that happens, everybody will be made aware of it. Okay, so I did see a question come through here. What is the difference between the different segments? That's a really great question, Scott. I'll quickly go over them as they sit in these versions here. 1.0, as I said earlier, was the very first AI module that we brought to life, okay? And it uses what I like to call all the off-the-shelf filters and alerts, the same filters and alerts that me, you, and every other user have access to. It does not make use of any custom formulas, okay? So that was the very first AI that we brought onto the scene. Next came Holly 2.0, and Holly 2.0 not only uses the same filters and alerts that Holly 1.0 does, but is able to make use of custom formulas that we create for it and fold those into the calculations. And then Neo, of course, this is the reborn Neo. The original Neo and what I'm about to tell you still kind of holds true, but not only can it use custom formulas as well, but it was the more aggressive of the trio. All right, and with the replacement of original Neo and the new Neo, I can't say, well, maybe its stop losses are a little bit beefier than 2.0 and 1.0, so we could say it takes a little bit more risk still, but it's definitely the more aggressive of the trio. Wouldn't you agree, Steve?
I would agree, and I was waiting just to pick my spot to just also say that the new Holly Neo for the last 6 weeks, like Jamie said, is correct. It's not getting you into trouble, and when it's not getting you into trouble, it's steering you to some good stuff. So without a doubt, it's up to you guys to mess it up. But I say that in jest. But what I really want to say is that what I've noticed, and this is a big one here, is it on the is that on just Neo? Go to just Neo. Can you show them just the histogram? Go to your segments and go to just histogram so you can just see Neo. It's the most, see that? What I want to say is Neo's a fighter, man. Neo doesn't always start off that well, but it ends pretty solid is what I've been seeing for the last 6 months. And if anything, this is a great teaching tool for newer traders, because here's what it's teaching. I was discussing this with Jamie this morning, is that it's showing you that it's a long day. It's 6.5 hours of action. And these trades really are designed, those 4 strategies really are designed to be all day holds. That's why they expire at the end of the day. So when you see a histogram like that, it's a perfect illustration of how the trade is the bigger picture. It's not the first 90 minutes and you're like, oh man, this thing's down $200. God dang it. And then the ones that get out early start to learn those lessons that Jamie and I learn very often on our own without a Neo reminding us day after day that, hey, take it easy, reminding you, take it slow. It's a long day. Oh, you're getting your emotions all in check and you just sold and you watch this thing close green. Okay, well, that's your fault. Don't do that again next time. That's it.
Absolutely. And, since Steve and I have been around since, the 90s in the markets and the trading world, it's a little harder for us to get surprised, so to speak, right? But I love it when I'm surprised, and I really love it when the AI or one of the modules surprises me and does something where the outcome is different than what I thought in the beginning. And Neo was a perfect example of that today, because we're used to seeing it. Maybe it'll take a small drawdown, but today's was just a little bit bigger. Not really that much when you think about the scale of things. But we're just not used to seeing it get down this much. I'm like, oh, well, maybe today's just, everybody's got to have their losing days, but not the case. It pulled it out. Now, it did try a few shorts, and some of them worked. Some of them did not. But in the end, check out CUE. I mean, talk about a beautiful entry here. Not so much spread between conservative profit and moderate profit, but, man, as far as chart goes, I mean, look at that beautiful little consolidation area there before the signal, little flat line area, and then bam. I mean, talk about getting into a trade and not really having a lot of fear from a chart perspective. I mean, it's hard to get any better than this. Then later on in the day, or I say in the day, let's see, 1, 2, 3, 4, about an hour after the trade, 45 minutes right there where it pops above. Man, what a great time to add to that position. You're getting in it here because you have statistical probability on your side from a module that is Neo that's been crushing it here lately. You see this nice calm little area right here. make an entry with the AI. Hey, what might happen anytime now is that we're going to get a range break, a nice tight pretty range break. Okay, so this arrow right here, let's just put an arrow right where that range break did occur. Let's say you just popped into 100 with Holly, wait for the range break, and of course, what do we always like to have with our patterns? Okay, we like to have volume. All right, now check out what Q Biopharma, I should say, finished as far as a relative volume goes, 5.36. That's big. All right, this little guy usually kicks out 150,000 shares, 544,000 today, well above its daily average. So what did we have? We had statistical probability on our side. We had a nice, calm, collected pattern here. We had a second auxiliary pattern emerge on top of that in case we wanted to leverage or, you know, stick with the trade. Hey, you like your share size, but when you see things like this, this is definitely a time to, you know what, I'm at 100, I'm gonna bump it on up to 200 or 300, and you know, we get the volume push, which we did, and then it was just off to the races. Nice little pop up, nice little calm into the close. This little guy right here, you know, burning a lot of steam over the past couple of days, but if it sets up again nicely on the intraday, where you can control your risk and manage it, not a bad setup. You know, never even got close to the what was that, a 45-cent stop, but once you got accustomed to it and you made this break here, you could have easily adjusted your stop to this level here or break even once we got out of this little congestion area right here. That would have kept you in the trade all day. But that is the key thing that you're going to notice from all these NEO trades. 6 as relative volume on CRS, okay? All of these stocks that come from NEO are going to have exceptionally high volume on a relative scale, all right? And that's really what we're going to be focusing on, or I know that Michael's focusing on that for Holly 1.0 as well, is you want to go to where the party is, and the party in the market is volume. Of course, volume is not a guarantee, but when you couple it with statistical probability and some viable data patterns here, it becomes very, very powerful, or what I like to call the great equalizer. All right, so what we're going to do here is we're going to pop on back to everything that Holly did today, because there are a couple of examples that I'd like to point out about capturing some of that, I keep wanting to say risk off, risk on, moderate versus conservative risk spread here. So CRS was a really good one. I believe that one, was that a, I can't remember if that was a Holly or a NEO or a 1.0 CRS. Yep, that was NEO. And we see the volume right here finishing the day at 6.01. And once again, from a, I mean, this is almost just like the inverse of the one that we just looked at, okay? Clearly a seller in the open, take a little bounce back up, sachet back on down. Holly gets the signal right here at 49.90, okay? So once again, kind of similar to the trade that we just looked at to the upside. What is looming on the horizon here? And of course, 15, 30, 45 minutes after the statistically weighted entry that Holly gives us to the short side, what are we exhibiting down here? Another range break to the downside, boom. And of course, when that hit with a volume, that was the majority of the move there. So you're in a little bit with Holly right here, got these nice calm even bars leading up to this auxiliary event right here, boom. Perfect time to tack on, double up, triple up that position, because we've got volume coursing through it, and we've got a nice clean range break there, and then picture speaks 1,000 words, off to the races. 10-period average, usually, you know, when a stock is going up, we're using that as a guide. Exact opposite on this one. Staying well below, creeps back up to it, gets tapped back down, pretty much holds it down for most of the day. What we saw over here towards the close probably is some short covering going on there. Now, CRS still got a ways to go. It's still right in the middle of some chop there. But we will be taking a look at some of the short sales that NEO's been putting on that none of the AIs we're putting on before NEO got retooled, and we'll save that for the end here. But the bottom line is that on this CRS, check out what check out what the AI booked in conservative profit mode here. All right. And, I beat this topic like a dead horse because it deserves to be. And that is the AI is not the best at picking exits. They're just all these pre-programmed things like timed hold, or whether the stop gets triggered or not, or maybe a profit target is in there. And then the audibles that she can call, which are some of these not so timely exits, okay? So we're in the trade here. After 30 minutes after the trade, it's not doing what it's supposed to. The short's supposed to be moving down. It's just hovering right at the entry line. So what does the AI do? It's like, this thing's not working. I'm gonna close it for a flat, okay? Well, you and I have better chart reading skills than Holly for exit. All right, so it's not really running against us. It's coming nowhere near our hard stop, so maybe it just needs a little bit more time. And that's what everybody needs to be aware of, is the statistical probability on these plays is good for the day, all right? Sometimes they get up and boogie quick, sometimes they consolidate for a little bit, but that's not necessarily a bad thing. So all we have to do is go, all right, I see the AI's exiting. I've seen this song and dance before. I'm gonna give it a little bit more time. Therefore, you're gonna be taking more risk. You're going to be falling into the moderate risk versus conservative risk, ignoring the AI exit signal, and then you would have got to enjoy a nice downturn in the CRS short. Whereas if you got out with Holly, you flattered the trade. Now, that's funny because how many times have we done that as human beings, right? You just get bored. You get a little bit of fear in you. Oh, I don't want to lose money. I can flat it right here. No harm, no foul. But sometimes we just have to give things a little bit more time, especially when the volume was pumping like each and every trade out of NEO, all right? So some really good conservative versus moderate spread there. Let's just go ahead and sort by that metric, because one of the bigger ones today was from Holly Grail. And Steve, I haven't, maybe I'm just blocking it out because I've been paying so much attention to NEO as of late, but Sunrise Movers, making an appearance again. And once again, I haven't looked at the strategy.
I'm guilty. I've been focused only on NEO. I've been the bad boy.
Because Sunrise Mover was one of the best performing strategies for a very long time. Could very well still be that. I just haven't looked at the back office in a while. But talking about a trade that gets up in boogies right off the bat, this is it right here. I mean, look at that entry signal right there at 61.15, right in that opening 15-minute candle there, and then boom, this thing just went. Never looked back until the market closed. Looks like it's got some action going on there. But then again, on an intraday basis, just stairway to heaven right there. Stairway to heaven. All right. And we always talk about how stocks like to go up on the staircase. This is that staircase. And they like to go down in the express elevator, which was, illustrated a couple of different times in some short plays today and some other stocks that I looked at throughout the day. I think it was this one, talking about a stock that goes down in the express elevator. Stock going up, taking that staircase. What do we like about this one as well? High volume, just levitating over that 10-period average the whole way. Gets a little close down here, but nope, not having any of it, and just cruises all the way into the close. Now let's take a look at that JCS, which no spread there to be really to be considered. What do we have? $3 in there on $100 risks. But this one is a perfect example of just taking the express elevator down. Got these opening candles here. Holly gives us that nice little short sell at 872 at the top of this one, and there's whammy. Once again, another immediate gratification trade, which we always like those. But this one, just look at the slope of this one. Look at the slope of this guy. So let's talk about the conservative profit versus the moderate profit spread here. If I'm risking $100, man, that's a big difference between $60 and almost 460. That's a $380 difference there between taking the AI's exit and just going, you know what, this thing's strong, it's just motoring up. Think I'm going to ignore the AI exit and stay with it. And of course, this one was a timed exit. Sunrise Mover, if my memory serves me correctly, is a 30-minute hold time. Let's just confirm that. Sunrise Mover, yep, 30 minutes on the hold time there. So as we can see, because that's what she's programmed to do, but we've just had 2 consecutive green candles since the signal was delivered. Wouldn't have been that, didn't have to stretch your imagination that much to go, you know what, this thing's working. You know, check out what was going on over here. Once we got above this candle and started eking into this territory, it just didn't care about any of these levels over here. Could have been the volume, could have just been for whatever reason, it doesn't really matter. The thing just motored up all day. So ignoring that exit signal and just using some pretty basic risk management could have kept you in this one all day. And a big difference there between 60 and 440 bucks there. So let's see here. CHRW was another one I wanted to talk about, simply because of the difference that we have here between conservative profit. Not nearly as massive as this guy, which was, what was that? Almost the 8x factor. We'll call it 7 and change factor. You know, a little bit better than a double, which is nothing to sneeze at here. Interesting, I like this entry down here. CHRW comes down here and picks it up off that wick for a nice little bottom feed on the intraday, and then it was just slowly off to the races here. Not quite as pretty as SO, but hey, upward movement is upward movement. This arrow right here is where Holly called it on, let's see here. That was also a timed exit from on support, which is looking at a 60-minute hold time. So, of course, she would have had to have gotten out at the bottom of the wick there. All we would have had to do is gone, you know what? You know, a couple of different things here. You could have plugged out a sum with Holly. Never hurts to do the 50-50 methodology. I like the way that the 10 period kept it inflated there. But if you're not certain and you're like, yeah, I think this one might have a little bit more steam, but man, I'd hate to let it all erode, peel out a half with Holly. If you do that, you lock in that profit on the first half. If it does roll over and get you out, then you still made money on the trade. But check it out. Using a break-even stop on this one, along with many other ones today, that would have kept you in the trade for the duration, not had to sweat it. Whether you got out up here or gave it a little back and got out last 45 minutes, you still were able to extract some of the spread between conservative and moderate profit here. So all in all, banner day for the AIs again. NEO had us all scratching our heads early in the day, but ended up pulling it out as well. And what I'd like to point out about NEO, one more thing here before we progress. Notice there were no stop outs, okay? And when we take a look at one of these guys, let's see, that was QUE. Yeah, I believe that is the low of the day, Steve. And that is typically what NEO is doing. You don't see a whole lot of stop outs because usually the stop is the higher the low for the day. So a little bit wider on the stops because this one was tight because the range was so tight, but they can be a little bit more stretched out. So just keep that in mind as you continue to monitor and interact with NEO. Just check out those stop levels and you'll see what I'm talking about moving forward. All right, a little time check here. Boy, time flies when you're having fun. We're at 48 minutes after already. Okay, so a word about Brokerage Plus and continuing to use it, whether it's manually and you're manually entering trades or you're doing what I'm doing, which is running algorithms to extract information and find your groove. Because when I saw the market today and we had that nice little gap up and that nice little run after seeing those very beefy CC numbers, I'm like, well, we're out of this area with some conviction today, and we haven't seen this in a very long time. All right, so we could be, as JC says, at the beginning of a new bull market, and things tend to act a little bit differently. And today was the epitome of that. So when I saw those compare account readings, I'm like, oh, we'll probably have some follow through. And then because I've seen this in the last bull run that we had, when we just kept popping those all-time highs, I don't know if I have enough room here, but for example, in these runs here, in this last run here, all through here, you remember things, right? So since we're back in that territory again, and we could be at the beginning of another one of those runs, I'm thinking to myself, I've seen this movie before, all right? I've seen it. We got those strong readings. We're gonna have some nice follow through, but we're probably gonna flatline a lot of the day. And then a lot of these stocks that might be late hitting whatever, a 52-week high, an all-time high. The one I like to use here lately is a 250-day high. Just think about it in reverse order. Hey, what if I just bought anything hit a yearly high, anything hitting a 250-day high, anything hitting an all-time high? Now, I know from experience, even in a market at all-time highs, if you just pile into all those stocks, more than likely the outcome's not going to be so good. Okay, if it were that easy, that's all we'd have to do, and we wouldn't be having these webinars, and there wouldn't be all these studies, and it would be the holy grail. And we all know that that does not exist. So I'm thinking to myself, okay, if things start working like they used to work, we will get little pushes, but later in the day, things might get a little tired. So the question that I ask myself later in the day is, okay, we're starting to flatline here. So once we get up to these, once this market does its sideways dance, what do you think there's going to be, Jamie? You think there's going to be more follow through, or you think there's going to be more pullback? And I quickly answered my own question. I said the majority or the oomph of the move is going to be done. And so I decided in my little algorithmic experiment today in Brokerage Plus, okay, I'm going to take my 250 short, and I'm actually going to run it short, okay, and see what happens. And I clipped a screenshot right at the close. Now this is the live version, but I didn't close everything out at the close, all right? So it's starting to calculate in all these post-market gyrations like AVP that had a big spike up in the pre-market or the post-market, and MAXR that's going up in the post-market. But right before the close, this is what it looked like, okay? Let it pile into my typical 30 positions of stocks that are hitting a 250-day high. And these just aren't any old stocks. They have to trade 1 million shares a day, okay, because I want extremely liquid things in here, so that when I do start to do this stuff live, I don't want any surprises. I don't want 50-cent spreads. I don't want things that look like dashes on the chart. I want liquidity, because with liquidity comes smaller spreads and less slippage. So you can see, I think the first trade today, and I had the other one sorted by time. So yeah, the first trade today was 11:09 my time. I forgot to sort this one by time. 11:09, and by 11:33 is when the yield curve started to turn green. So once again, 11:09 to 11:33 was that a 24-minute period before the yield curve got green, right? Not that long. I just found that very interesting. Didn't take long at all. So you can see here, this is pretty much at the peak here. We had our vacillations. Kind of looks like that equity curve that Neo put on this morning, okay? But the bottom line is this: all of these are short positions, okay? In a market that is all-time highs, but because I've got a little bit of experience, over the past couple of decades, that resonated with me this morning. Once we get up into this area right here, I've seen this song and dance before, there's probably going to be more pullback than follow through once we get all the oomph taken out of the market. And that's exactly what we saw by letting this out and seeing what I put to real trading in the not too distant future. But it also gives me information that I didn't have before I could do something like this, i.e. running algorithms in a simulated environment. So whether it's this one that floats your boat, or something completely different. It might be convergence to the mean or anything. This is a whole new way to soak up information and get reads on the market according to whatever it is that you'd like to do. So get in there. If you're a premium subscriber, start putting those algorithms to the test, because by default, just like watching the AI, you will learn over time as these data sets, are much different than a backtest. Backtests are great. They show us what's happened in the past, but there's no substitute for seeing how something performs in a live market environment. Okay, looks like some questions came through, but Steve, looks like you knocked them out. Anything that I need to cover on any of these questions, or are we good to go?
Yeah, I think we're all good.
All right. Well, here we are, 5 minutes left. Perfect stopping point. We'll see how this one fares tomorrow. As always, we appreciate you guys taking the time to hear what we have to say. So Scott, if you're ready to walk us out, we are ready for you.
All right, sounds good. Just a couple.
Oh, and Scott, I'm sorry. One more little thing I want to point out here, because it's something that has surfaced only recently with the advent of the new NEO module. Okay, so, and this is seeing the slide for our trading books reminded me of this. NEO has been pointing out some very interesting patterns that the AI used to not point out. Okay, here's one right here in the form of love. Notice these sell signals down here at all-time lows, okay, or what we stock in the hole when it's at all-time lows, and we look to the left and there's no support for the catch on. Yeah, there's no love in the love trade right now unless you're short. Okay, Brad and Dan have also been pointing out one that NEO called as well, this LJPC. Okay, so notice it had a good signal and it made some money. All right, but then it started putting a bottom in, and look what Brad and Dan have been all over this one for a long time now. So since these patterns are now being produced by NEO, that's exactly what I talk about in my segment of the ebooks, is shorting stocks in the hole and how you can, benefit from them. So if we kind of go back to love here, what's going to happen? Is love going to establish a little base down here and then do the same thing as La Jolla Pharmaceuticals? Or is it going to establish a base down here and break to the downside for more downside? Okay, so here's what I would highly recommend. When you see NEO issuing a short trade of a stock that's in the hole, you might want to put it on your list to track it moving forward, because that's a great thing to do. That's exactly what's been going on in LJPC here, is that once this got on the radar, you put it on your list. Oh, look, it built its base. Now it's breaking that level here. We got some gap to contend with. These can be some really nice setups. Okay, that's all I wanted to talk about, because it's a very cool thing that's happening there. Starting to see patterns that are being issued by the AI, where before NEO was retooled, we never saw any of that type of action coming from the AI. So very good stuff. Okay, Scott, we are ready for you, sir.
Yeah, thanks. Just want to remind everyone that there's that series of ebooks that we released a little while ago this year, and if you don't have them, you should get them. They're very informative. Both Jamie and Steve contributed chapters to them. Just go to trade-ideas.com/setup to get them. Each one includes 2 chapters. 2 chapters with strategies, and they also include some cloud links, so you can add some of the strategies that they talk about in the ebooks to your layout. We got a podcast, which is probably going to be on hiatus until the new year, but generally we release on Fridays, so get ready to listen to the next one by subscribing. Just search for Trade Ideas Podcast wherever you listen to your podcasts. Add us as a subscription, and you can also scroll through and find some of those interviews that we posted intermittently. So those are some of the interesting episodes that are evergreen. They don't really age, so check those out. We've got a code good right now. Paper trade, good all month for 15% off your first month or year of trade ideas. And those of you that are subscribers and want to upgrade, just use that code and upgrade via your account management area by logging in the upper right corner of the homepage and select change my subscription. Use that code. Jamie's on Twitter at QuantBot. Steve Gomez you can find at Today Trader. We've also got at Trade Ideas. Facebook.com/Trade Ideas Pro is the Facebook page to like and share what we post with your buddies on Facebook. All your questions should be directed to info@trade-ideas.com. That's the best place to send your questions because it goes into our help desk software and the questions will not get lost anywhere. They'll get addressed and addressed quickly. Thanks you all. That's the last office hours of the year. We're going to have the recording up later on tonight or tomorrow in YouTube, and you get an email reminder tomorrow about where that playlist is located. Thank you, Jamie. Thank you, Steve. Have a good afternoon, everyone.